have a price action strategy, then there is a 90% chance, or even more than that, that you are making the mistake that I'm going to talk about in this video. I had it for over a year, and I didn't even know that I was doing this mistake, and it kept me from consistency for a very unnecessary long time. All right, so the problem right here is that most of us aren't even aware of it. All right, when we take a loss, we go to our journal and we write all kind of things of why we took that loss, or even we label it as a normal loss, while in fact I would say that the mistake that I'm going to talk about is one of the main reasons that we take so many losses. So enough with all the mysterious talk, and let's get right into it, and let's go to the chart and show you how it looks like. So the normal process of doing multi-time frame analysis, and this is not about a certain style of trading, all right, it's universal. No matter how concept you're using, we are all doing this disastrous mistake. So let's go to maybe the XY, and we're gonna do a multi-time frame analysis. All right, we're gonna go from higher time frame to lower time frame. So let's go to the daily, for example. So I'm gonna do my type of analysis, and again, this is not exclusive to any type of trading. So for me, I can see that we have been selling off for some time, right? And price just stopped right here. So the momentum has been lost from here, right? We don't have continuous expansions like we have here, here, and here, right? We stopped. So that's the first thing, price stopped right here. And the second thing is that I see that we put in the low right here, just like here. We put in this low, we took it, this low, we took it, this low, we took it, this low, and this low, we all took them. And when we put in the low from here, when price tried to take that low again, it stopped, right? So that's for me another sign of weakness. So the trend, so the downtrend is getting weaker, right? So for now, I have two strong signs that we might have a bullish run, all right, maybe a pullback to balance what we left from here. If we zoom in a bit and look at the structure, the recent structure, I can see that after the failure right here, we have some strong momentum to the upside, all right? So we broke the high from here and we pulled back, and then what we have, another break of a high here, and we pulled and we just stopped right here at this imbalance, right? So now I'm favoring the upside rather than the downside. Now if we zoom in even more, what I can expect is that when price comes back to here, you see this line right here, we might get a chance to long, right? So this is just a simple multi-time frame analysis. When we come back to here, right, I'm gonna look for longs. This is the XY. I don't trade it, but it means that I'm gonna short Euro USD and GBP USD, and maybe long USD GPY if it's in the correct structure. The thing right here, and the mistake that we all make, is that when we do all of this analysis and we see that price is here and we are looking for longs from here, so somehow we convince ourselves that the next move is going to be here. All right, let me repeat. After doing all this analysis and outlining a point of interest, which is in this case this one right here, we convince ourselves that the next move is gonna be to the downside to this point of interest, and then price reject from here. So a lot of times what will happen is that we're gonna try to sell to that point of interest, right? So basically we think that the analysis that we did is saying that the next move is gonna be to the downside and then the rejection to the upside, and this is a huge mistake, right? All the analysis that we did is not about price going to the downside to this point of interest and then rejecting. The analysis that we did, that if price came with the result that if price comes to this point of interest, there is a good chance that it's going to reject. All right. So what happens is that a lot of times we can't wait for that, or we try to rationalize that the next move is actually to the downside, and we find ourselves trading against the trend and against our multi-time frame analysis. So the multi-time frame analysis that we did is saying, this one is saying that price is losing momentum, the downtrend is losing momentum, and it's favoring the upside. All these imbalances that were left here and here also saying that price is likely to trade to the upside. The break of structures and the order flow on the lower time frame, or when we zoom in, is also saying that price is going to go to the upside. But when we do the final steps to outline the possible point of interest, we do the mistake of trying to short, to walk price to that point of interest. All right. And again, that is a huge mistake. We don't know if price is going to trade to this point of interest. First of all, we are trading with the overall trend. That's first. We are trading against the order flow. All right. Because from here, the price doesn't have to go to this point of interest. We said that if price comes back to here, then we might get a rejection due to all the confluences. So all the confluences that we had, that we built from higher time frame to lower time frame, or higher time frame to recent structure, is saying and favoring bullish. They're not confluences that the next move is going to be this one right here. And this is happening a lot of times when we do the analysis on the higher time frame. So for example, if this is a 15-minute structure and we're going to trade a 1 minute, we usually don't try to short this one right here, right? We just wait a couple of candles, so that we wait for maybe half an hour, price to come back to this point of interest, and then we're going to take longs, right? But when it's happening on the daily or the 4 hour, we tend to be impatient, right? And we try to sell, right? We try to sell to that point of interest. Again, there is nothing suggesting otherwise than maybe this imbalance, all right? This, for me, is the only indication that price might come back to here, might offer the pullback to here. But all of the confluences that we have gathered, all right, from the start of the analysis, is saying that if price comes back to here, there's gonna be a good chance that we're gonna reject. All right. So when we try to look for shorts from here, we think that we are aligned with the multi-time frame analysis and the overall structure, while we are not, in fact. All right. Let me show you another example, and it was on gold. For example, on gold, look at this, right? It's extremely bullish, but look what happened, and I saw a lot of people shorted gold, took a short on gold. Can you believe that? So for me, I was outlining the possible level that price can reject from, and I saw this imbalance, right? And I saw these two lows. Let's go to the 4 hour. So I was somewhere around here, and I saw that we have these two lows and we have the imbalance below them. And my analysis was, if price comes to here, I'm gonna look for longs, right? And a lot of people also had this view, but what happened is that a lot of people try to shorting to this imbalance, basing their shorts off of this bearish imbalance. They saw price sweeping the highs from here, and they say to them, and they convince themselves that now it is the right time to short, all right, to short to this. So they try to short from here, they got cooked. Again, trying to short from here, again they get cooked. So when you do your analysis, always state it like this: if price comes to this point of interest that I just outlined, if, not when, because when you say when, you think that everything is suggesting that the next move is going to be to that point of interest, and it doesn't necessarily have to be the next move. Price can even never visiting that imbalance or that point of interest and keep trading to the upside, right? And now you have to redo the analysis. So again, don't try to walk price to your point of interest, because all the analysis that you made is saying that your point of interest can be a rejection point. Your analysis isn't saying that the next move is going to be to your point of interest. Huge difference. All right, so quick video. All right, I don't know, about 10 minutes, but believe me, I took enormous amount of losses because of this. So I see you in the next one. If you have any other questions, you can always DM me on my Twitter account or leave a comment down below, and I'll answer you as soon as I can. Now, happy trading and good luck.